We're going to be going over how I made 2% on Euro Pound last week. Obviously, took a position on Monday and also a position on Wednesday. So yeah, we'll start off with the fundamentals and then we'll go into the technicals at the end. So starting off with the pound, one of the biggest drivers for our bearish call last week was the sharp increase in political uncertainty surrounding the UK. So at the start of the week, and on the weekend, we were seeing reports about growing pressure on Keir Starmer, alongside speculation of a potential leadership challenge from Andy Burnham. And essentially, as that uncertainty grew, investors started aggressively selling UK government bonds, which pushed the UK 30-year gilt yield above its 1998 highs. Now, normally high yields could support a currency, but when yields rise because investors are liquidating bonds and losing confidence in the fiscal outlook, that's actually a bearish signal for a currency. So instead of the pound benefiting from higher yields as you'd typically assume, the market interpreted the move as rising political risk and then weakening confidence in the UK, which obviously weighs on the pound. At the same time, if you come down to the CFTC positioning, we saw that asset managers were overall net bearish on the pound with about 93,000 contracts, which is quite a lot. And then at the same time, capital flows were then obviously leaving the UK and then they were rotating into the euro. Obviously, this is because investors are increasingly viewing the eurozone as more stable from a debt and fiscal perspective in contrast to the UK. So, and a major reason for that is obviously because of Germany's historically conservative approach to fiscal management. So they've maintained stricter debt discipline for years, which obviously gives investors more confidence in the eurozone or the euro bond market when you've got something like this happening in the UK. Also, another reason is their debt to GDP is extremely low because there's like a cap. But yeah, that's essentially why we were bullish on the euro. And if you look at the CFTC positioning down here, you can see that asset managers were net long by 300,000 contracts, which is massive. And it kind of tells you where the big institutions are moving their money. If we come into the institutional insights page, we can actually see that, for example, ANZ here, they were bearish on the pound, obviously against the Australian dollar, but they were bearish on the pound. Up here, you can see UBS said on the 9th of May that they're looking for short positions in the pound, which obviously this all contributes to our bias. And then throughout the week, institutions like SocGen came out and said that they were short on the pound and that Euro pound was one of the positions they were looking at. Similar with JP Morgan, I believe. Yeah, so JP Morgan here, they are long on euro, short on the pound. So obviously this coming out throughout the week just kind of supports the bias and can obviously lead to us holding positions for longer, maybe targeting a 1 to 2, 1 to 3, etc. So overall, the macro bias was essentially a combination of three things coming together at once. Obviously, we had political uncertainty in the UK, bond market stress, and then capital outflows from the sterling moving into Europe. And then obviously strong institutional positioning and flows as well, which were supporting the euro. For technicals, I kept it pretty simple. So obviously marked out some demand zones and then key levels as well. So the 865 on the Wednesday was perfectly respected. Obviously, this was on the Monday position. We didn't really get near a key level, but we were in a strong demand zone and the macro lined up. So yeah, that is essentially how I made 2% on Euro Pound last week trading with fundamentals.